There is a skill in trading that nobody wants to talk about. It's not your indicator. It's not your strategy. It's not your risk management. It's your ability to sit still and do absolutely nothing. Jesse Livermore, arguably the greatest speculator who ever lived, said it plainly. He said, "It was never my thinking that made the big money for me. It was always my sitting." Most traders hear that quote and nod, but almost none of them actually understand it because sitting feels like losing. Sitting feels like missing out. Sitting feels like the market is leaving without you. And that feeling, that unbearable itch to do something, is the single biggest reason most traders fail. Tom Hougaard, one of the most brutally honest traders alive today, wrote something in Best Loser Wins that I think every trader needs to hear. He said, "The market rewards patience and punishes urgency." Think about that for a second. Every time you rush into a trade because the candle looks like it's about to break out, every time you chase an entry because you're afraid it will leave without you, you are being punished for urgency. The market doesn't care about your timeline. It doesn't care that you've been watching the screen for 3 hours and feel like you need to show something for it. The market moves when it moves. And the traders who understand this, the ones who can wait days or even weeks for a single setup, they are the ones who survive. Let me tell you what impatience actually looks like under a microscope. You open your charts in the morning. The market is ranging. Nothing is happening. Your setup isn't there. A disciplined trader closes the laptop and goes for a walk. But you don't. You stay. You start looking at lower time frames. You start seeing patterns that aren't really there. You start convincing yourself that this consolidation is about to break. You enter. The market chops you out. You enter again. Chopped again. By lunchtime, you've taken 4 trades. None of them were in your plan. You've lost 3% of your account. And the setup you were actually waiting for? It happens at 2 in the afternoon. But you're tilted now. You're frustrated. You either miss it entirely or you enter with half your normal conviction. Impatience didn't just cost you money on the bad trades, it cost you money on the good one too. Mark Douglas dedicated an entire chapter of Trading in the Zone to this concept. He called it the zone of uncertainty. He said most traders cannot tolerate the emotional discomfort of not knowing what's going to happen next. So they trade to relieve the tension. Read that again. They trade to relieve the tension. Not to make money, not because they see a setup, but because doing nothing feels worse than doing something. Douglas argued that the greatest traders in the world have learned to be comfortable in uncertainty. They don't need to know what happens next. They've accepted that any single trade is irrelevant. What matters is the pattern over hundreds of trades. And that acceptance, that deep, bone-level acceptance of uncertainty is what patience actually is. Here's what the neuroscience tells us. Your brain has a dopamine system that is designed to reward action. When you see a potential trade, dopamine fires. It says, "This could be the one. Take it." When you're sitting and waiting, dopamine drops. Your brain interprets inaction as a missed opportunity. It creates anxiety. It creates restlessness. It whispers, "You should be doing something." This is not a character flaw. This is biology. Your brain evolved to hunt, to gather, to act. It did not evolve to sit in front of a screen and wait for a specific pattern on a candlestick chart. Understanding this is crucial because once you realize that the urge to trade is a neurochemical impulse and not market insight, you can start to separate the signal from the noise. Stanley Druckenmiller managed money for George Soros for over a decade. He's one of the most successful macro traders in history, and he has said something that contradicts everything most retail traders believe. He said, "I've learned many things from Soros, but perhaps the most significant is that it's not whether you're right or wrong that's important. It's how much money you make when you're right and how much you lose when you're wrong." What does that have to do with patience? Everything. Because to make a lot when you're right, you need to be in the right trade at the right time with the right size. And that only happens when you've waited. When you've been patient enough to pass on 50 mediocre setups to take the one great one. Druckenmiller didn't make his fortune by trading every day. He made it by waiting for the fat pitch. Let's talk about the math of patience versus the math of overtrading. Trader A takes 2 trades per week. High conviction setups only. Win rate is 65%. Average winner is 2R. Average loser is 1R. After 52 weeks, Trader A has taken 104 trades with an expectancy of plus 0.95R per trade. Total plus 99R for the year. Trader B takes 3 trades per day, 15 trades per week. Win rate drops to 45% because most of these are low-quality setups. Average winner is 1.2R because they're taking profit too early out of anxiety. After 52 weeks, Trader B has taken 780 trades with an expectancy of plus 0.04R per trade. Total plus 31R. Trader A made 3 times more money by trading 13 times less often. The math doesn't lie. Patience is literally a multiplier on your returns. Seykota, who turned $5,000 into $15 million in 12 years, had a simple philosophy. He said, the elements of good trading are 1. Cutting losses. 2. Cutting losses. 3. Cutting losses. If you can follow these 3 rules, you may have a chance. But what he didn't say explicitly is that cutting losses includes the losses you never take, the trades you never enter, the setups you walk away from. Every trade you don't take is a loss you didn't have to cut. That's the deepest form of patience. Not just waiting for the right entry, but having the discipline to recognize when there is no trade to take at all, and being completely at peace with that. Tom Hougaard has another concept that I think about constantly. He talks about the difference between active patience and passive patience. Passive patience is just sitting there doing nothing, watching the screen, feeling miserable. That's not what we're talking about. Active patience is engaged. It's alert. You're watching the market with full attention, running scenarios in your head, preparing for what might happen. You're like a sniper waiting for the shot. You're not asleep. You're not distracted. You're coiled and ready. But you will not pull the trigger until the crosshair is exactly where it needs to be. This is the mindset shift that separates struggling traders from consistent ones. Patience is not passive. It's the most active thing you can do. It requires more discipline than taking a trade ever will. So how do you actually build patience as a skill? Because make no mistake, it is a skill. It's not something you're born with. Here's a practical framework. First, define your A+ setup in writing, not vaguely in your head, on paper. What does your perfect trade look like? What time frame? What confluence? What confirmation? Be specific. If you can't describe it in 3 sentences, you don't know it well enough. Second, create a rule. Only take trades that match your A+ criteria. Everything else is a spectator sport. You can watch, you can analyze, but you cannot enter. Third, track your patience. Every day, write down how many times you felt the urge to trade but didn't. This is your patience score. Over time, you want that number to go up. You're training your brain to resist the impulse. And every time you resist, the neural pathway for discipline gets stronger. There's a concept in Japanese martial arts called Zanshin. It means lingering awareness. It's the state of relaxed alertness after you've completed an action. In trading, Zanshin is what you practice between trades. You're not checked out. You're not scrolling social media or watching YouTube. You're in a state of calm readiness. If you've ever watched a cat before it pounces, that's Zanshin. Total stillness, total awareness, total readiness to act. And then, When the moment comes, explosive, decisive action. This is what patience looks like in practice. It's not about being slow, it's about being ready. If this is resonating with you, hit subscribe. We go deep on trading psychology every single week. I want to leave you with one final thought. Livermore lost everything multiple times in his career, not because he didn't know how to trade, but because he stopped being patient. Every major loss in his life came from the same mistake: abandoning his rules, chasing the market, trading out of boredom or ego instead of conviction. And at the end of his career, he reflected on it all and said something that I think is the most important thing any trader will ever hear. He said, "After spending many years in Wall Street and after making and losing millions of dollars, I want to tell you this. It was never my thinking that made the big money for me. It was always my sitting." Got that? My sitting tight. The money isn't in the trading. The money is in the waiting. And the traders who truly understand that, they're the ones who last.